You are listening to chartingwealth.com for Thursday, the 4th of January, 2018. What do we see going on in the markets? We see the S&P 500 up 0.63%, the Qs up again 0.97%, TLT up instead of down 0.48%, and gold down instead of up 0.26% down. That's the only thing down for the day. Let's jump into the S&P 500 and see what we see. Of course, we had a pullback on the past week ending Friday the 29th. It was our first pullback in 5 weeks since we had a spinning top back on the 17th of November. That pullback again was there at the very end of December, that last week in December 2017, ending the 29th of December. So far, 2 days into the 4-day week, we have a green up candle, and we see the derivative oscillator continuing to lose energy, but of course our main oscillator, the price percent oscillator, and I really encourage you, those of you who want to know more about the price percent oscillator, we have a great training on our master indicator at chartingwealth.com. Please go there, listen to that. While you're there, also take the training we have on the Heiken Ashi candlesticks, another one of our top trainings, just 5-star reviews from everybody on both of those. Please get them. So we see that the weekly is up for the not the NASDAQ 100, we'll go to that next, for the S&P 500 big market moving stocks in the market, big companies, multinationals almost all. What do we see going on the 2-day chart? Now it had just rotated over going down on the 29th. And again, as we told you guys, those last couple of weeks in the market, particularly that last week, of course, all the big players are out of town. They have the caretakers in. The volume reduces significantly. And what did we see? Well, it drifted over, crossed over going down on the 29th. What are we seeing happen now? We had Tuesday, the 2nd is when the last candle ended. Of course, we're now into the first day of the latest 2-day candle. And what do we have going on there? Well, it looks like we might have a crossover going up. So we shall continue to watch and see what we see when it comes to the candlesticks on our 2-day chart. And again, we'll just keep watching. Once that candle finishes drawing, we'll know if indeed we have a crossover going up on the 2-day chart, which would put us back into play for up movements since the weekly is already heading up. Now, what about the 4-hour chart? Of course, it crossed over in the morning on Wednesday the 3rd and has been heading up since then. It crossed over going up on the morning of the 3rd and moved up not only in the morning but strongly in the afternoon. Strong movement well above the Bollinger Bands on both those candles. So again, we'll keep you posted as to when things may get back into play on the S&P 500 unless you had stayed in it because you were using only the weekly chart, which again is fine. You can sure do that. If you would have jumped in somewhere around the 249, the 250 mark, of course, how high has it gone? Well, as high as 270. That's $20, my friend, with the beauty of the weekly vertical crossover from just the beginning of October to the beginning of January. Isn't that beautiful? That's why we love the weekly vertical crossover. Now let's talk about what's happening with that weekly vertical crossover on the Qs. We warned you it was a weak crossover. We told you to be very careful getting in the market on Monday after that weird down week. And of course, things went down weird during that week, as we talked about, the caretaker week, and we did have a weekly vertical crossover. We announced it, but we also told you to be careful. Check out the markets at 10:30 a.m. on Monday Tuesday, because the markets were closed Monday. And what indeed happened? Well, the markets were shooting up, so there was no entry point. Up again for the day, 0.97%. Looks like we might end the week, and again, the week's not over yet. We still have all day Thursday and all day Friday to see if indeed the Qs continues to climb. Little caveat here, when you look at what the Qs is doing, it recovered back just a little above where it had closed at the end of the week, ending December the 22nd. So again, just keep that in mind as we look at our Heiken Ashi candlesticks, even though, yes, it boomed over the course of Tuesday and Wednesday, up over 1.5% on Tuesday, up almost 1% on Wednesday. But again, keep an eye on things. Keep your eye on the prize. And again, if we have a weekly vertical crossover going up, back up at the end of the week, and this was just a slag for us, just a little fake out, hey, no harm, no foul. We didn't have an entry point on this yet, but if we have one, if things start going down and the exuberance ends, people take profits and drive things down, we will let you know. Remember, we're not forecasters, my friends. We are trend followers. Oh, and just for the record, for those of you using your daily market worksheets, derivative oscillator losing energy, price percent oscillator heading up. That's on the weekly. What do we see on the 2-day? We see that the price percent oscillator is getting close to crossing over. We'll continue to watch the candle as it develops. And what do we see on the derivative oscillator? It's actually already gone positive. Well, it's gone positive, but that candle's not finished drawing. When the 2-day candle finishes drawing, then of course you can call it. But a big up candle so far. Again, don't have confirmation on it yet because things haven't finished drawing. Now, what about our 4-hour candles? Well, we're into 4 in a row. Strong, big candles actually seem to be gaining energy pretty much every candle. The last 2 candles were the candles for Wednesday, well above the Bollinger Bands, just rocketing up with lots of enthusiasm. So again, keep your eye on things. We'll see how long that enthusiasm keeps going and if we have some potential entry points for it. Okay, that's where we are on the Qs. We'll continue to monitor things, keep you posted. What's going on TLT? Well, remember, TLT crossed over going up all the way back on the week ending the 1st of December. Went up for 2 following weeks, then the 2 weeks after that down, and so far over the course, and has not crossed over going down. Looked like it was getting very close for the week ending the 22nd of December, but did not manage to do so. Derivative oscillator still losing energy, but the price percent oscillator appears close to be close to crossing over. But again, bit of a bump up on Wednesday. What do we have so far candle-wise? A green spinning top with a long wick on the bottom. But again, green spinning top no less, no crossover yet. We'll see how things go on TLT and just what ends up shaking out in stocks as the week goes forward. So far, the first day of this latest 2-day candle, what do we see going on there? Well, of course, we see, again, a green spinning top, bigger wick on the bottom than on top. Derivative oscillator losing downward momentum. Price percent oscillator still heading down, but much flatter than it was, not going down at nearly the steep angle that it was going down. And again, if we have a crossover, which we don't, the 2-day is still in a confirmed down move, we will let you know because that could open things up for an up move, but we haven't seen that yet. We may, in fact, see the opposite occur with the weekly chart. What's going on the 4-hour chart? Well, it crossed over going up back in the morning on the 27th of December, went up until the end of the day on Friday the 29th, and of course, the first trading day of the week, Tuesday, down strong and really slid sideways over the day. Little bit up, up about 0.5%. But as far as that strong down movement on the prior day, really sort of a sideways slide. So we'll keep our eye on TLT, let you know when something happens and when there's a possible entry point. What do we see going on gold? Well, gold is interesting. So far, it looks like it's going to be a robust crossover going up into what may be the third week of up movement on gold. So the strong up movement on the week ending the 29th of December. And so far, strong up movement the first 2 days of this shortened week. The derivative oscillator has gone positive and the price percent oscillator is positive, but the candle's not drawn yet. So again, we don't call things until that candle is drawn, and it won't be drawn till the close of business on Friday. We'll continue to keep our eye on it, of course. What do we see on the 2-day chart? Well, it crossed over going up back on Friday the 22nd, and it has been going up since then, except over the course of this latest 2-day candle, we see that it is a bit of a pullback. Things topped off somewhere around topped off somewhere around 124.85, and a bit of a pullback on the latest Heiken Ashi candlestick. How the derivative oscillator continues to gain energy, and the price percent oscillator moving up strongly on that 2-day chart. Let's drill into it a little bit. What do we see going on the 4-hour chart after a rocket ascent when things crossed over going up on the morning of Thursday the 14th with the jumping in point somewhere around about 119. Things jumped up all the way to a high of around 125, something like that. And what do we see going on? Strong up movement in the morning and then a bit of a pullback in the afternoon. That is the first red candle we have seen over about 12 or 15. So again, we see a red spinning top, which means indecision at the end of the day, led to just a little bit of a pullback of about 0.25%. What do we see going on with the price percent oscillator? It has gone flat, and the derivative oscillator has continued to lose energy. So we'll watch that. That 4-hour chart crosses over going down. Be aware, it is still an active and accurate total trading chart. Even though it typically goes out about mid-December, it did not do that this year. So again, watch the trending on that 4-hour chart if you've ridden it all the way up in gold. Now, just because it's pulled back a little bit doesn't mean you have to get out. You'd have missed everything if you'd have jumped out back on the afternoon of the 15th or the morning of the 19th when we saw 2 red pulling back candles. This one's a little bit stronger with more down wick, but we'll continue to watch things. Watch, pay attention, don't lose all you've gained, but at the same time, don't pull out too soon. That's where we are, folks, as we end the day on Wednesday, the 3rd of January, and go into Thursday, the 4th of January. We appreciate you being with us. You have questions, problems, concerns. You want to know what we're up to, what the latest training is. Always write us cw@chartingwealth.com. And of course, check out the website. Make sure that you subscribe to our daily market review so that you get all the information, the latest releases, and the latest training that we make available to the public. Thanks so much, my friends. God bless from the entire team here at Charting Wealth World Headquarters.